It's likely you've heard of the Federal Reserve, but are you familiar with a critical branch of the Fed known as the Federal Open Market Committee? Welcome to Economics Made Simple. Please remember to like this video and click that subscribe button to make sure you don't miss any future episodes. It's the Federal Open Market Committee that decides the direction of monetary policy in the United States. To help us learn more about it, we've brought in a special guest. Hello and welcome back. Can you help us understand who the Federal Market Committee is and what they do?
Yes, of course. Let's go ahead and get right into it. The Federal Reserve, America's central bank, is charged with the responsibility of pursuing monetary policy and overseeing the financial system. But whenever the Federal Reserve makes news, it's typically in connection with its application of monetary policy. By statutory mandate, the Fed is required to apply monetary policy in such a way so as to promote effectively the goals of maximum employment, stable prices, and moderate long-term interest rates.
That makes sense. So tell us, how does the Federal Reserve go about doing that?
Monetary policy is pursued by adjusting the money supply and influencing credit conditions in the economy. This includes making changes to the federal funds rate, which is the nation's single most important interest rate because it influences virtually all other interest rates. The specific strategies used on behalf of these efforts include open market operations. Unsurprisingly, the division of the Federal Reserve that conducts open market operations is called the Federal Open Market Committee. The committee is the official monetary policy-making division of the Federal Reserve.
So now that we know who the Federal Open Market Committee is, can you tell us who exactly sits on the committee?
You might say the Federal Open Market Committee is made up of the Federal Reserve's elite. The committee has a total of 12 members. 7 of those are the members of the Board of Governors of the Federal Reserve System, which includes the chair of the Federal Reserve. Then there's the president of the Federal Reserve Bank of New York. The remaining spots are taken by 4 of the 11 Federal Reserve Bank presidents, who each serve one-year terms on a rotating basis. The committee members meet 8 times each year to discuss what to do about monetary policy.
You said the Open Market Committee meets 8 times a year. Would they ever meet more frequently or less frequently?
They wouldn't meet less frequently, but if it's appropriate to do so, they can meet more frequently. Also, the meetings are very private. Whenever the Open Market Committee gathers, Fed watchers go crazy speculating what exactly they are discussing and how that will impact monetary policy.
Sounds kind of sneaky, if you ask me. Is there any way to find out what goes on at these meetings?
The public can gain insight into the committee's deliberations and decisions a number of ways. These include policy statements released after each meeting, as well as the Fed chair's press conference that also follows each meeting.
A more transparent Federal Reserve sounds good to me. Thanks once again for another simple explanation. We'll see you again soon.
I'd say transparency is only effective if you take the time to do your research. I'm glad I could share.
Well, that's all for today's lesson. If you enjoyed this video, please don't hesitate to hit the subscribe button and watch for more Economics Made Simple.